Good morning and welcome to the B.F. Anderson Technical Report for October 28th. I want to introduce you to a technical concept I first learned about from Nicholas Darvas, who wrote a book back in 1956, and it was called the Darvas Box. And what Darvas did was that he would take prices and make boxes out of the price movements. Now, this is the S&P 500, where I've gone back to 2013, and you can see that in December of 2013 we entered this box. Now, it has been over 3 years that we have been locked in this box trading range. Now, history doesn't always repeat itself, but it does rhyme, and we're going to look at a situation like that. But you can see what happened here. We entered the box, rallied, everything was looking fine, then we had the drop in September of 15, then the drop in January, February of 16, retested the top of the box, then we have broken out. Now we're forming a new box on top of this box, and we'll just have to see if we break out, say, the 2200, which would put us breaking out of the second box. Now, one other point here, the market did drop 15.2% from this high to this low. So this is kind of what we would call a shakeout, where we're starting to see a lot of pessimism. In fact, last week we saw a record number of money leaving stock equity funds to the tune of $14 billion, which was a substantial amount of withdrawals. This is, the way you have to look at this is that if everything was just wonderful and everybody was just pouring money into the market like they did at the top, we would be in a bubble. So basically, the idea of sentiment is to do the opposite of the masses. Now, let's go back in history a little bit. Again, I said history doesn't necessarily repeat itself, but it can rhyme. Now, I went back and looked at the last 40 years, and I found that you get these sideways movements about once a decade. We had the same thing back in 1982 to 1985. But let's just take one situation. This is 1992 to 1995. And I do think it's interesting that bull markets tend to start in the second half of decades. Well, anyway, you can see here that we entered the box back in 92. We moved sideways, rallied, it's almost so similar to now. Dropped 10%. Then retested the top of the box, and then broke out. Now the difference here is we didn't form a second box, so we just went straight up. Now this was a 3-year sideways move, and then the market went up 96% over this time period. Now, what's important, I believe, is you've got to identify what is causing the breakout and what is the leadership. So here we have the leader back in 1995 was Cisco Systems. And you can note here that Cisco, once it broke out of the box, moved up 325% after moving out of that base. Now, what was important here was that there was a lot of volatility going into this. Up, down, so forth. But when it finally broke out and got into an uptrend, you needed to say, okay, now what's going on here? Because most people did not understand Cisco back in 1995, 1996. I can remember I didn't understand it. I remember just saying, gosh, I remember there was a song called Cisco Kid, and then I can remember people referring to it as Crisco, like the shortening, and it was a difficult thing to understand, but this particular breakout and this particular stock was telling you about a major move coming in a new technology called the internet. Now, where are we today? Let's look at some ideas today, being that we are breaking out and forming, we've broken out of the range. Whether we hold it or not, we don't know. But I would say that I'm seeing, the main things that I'm seeing are anything to do with e-commerce and cloud computing and mobile devices and things that are benefiting from cloud computing and things that are benefiting from mobile devices. Now, Adobe has adopted a cloud computing software. Now, Adobe, again, is in a box. It broke out of the box and is now pulled back. This has been a difficult week for the market because of earnings season. Now, here's another example. Alibaba, which is the Amazon of China, has formed a box, broke out of the box, and is now pulled back into the box We just have to see if this is going to break out. Now, one that has broken out recently is Facebook. Now, let's think about Facebook for a minute. We're talking about a company that's probably the most profitable company in the world right now. They are going to report earnings now for the third quarter in November, so we'll have to see what happens with that. But it has formed a box, 130, 126 range, broke out to 133, all-time new high, pulled back this week just like everything did. However, we've got a company here that has 7,000 employees. They don't have a lot of inventory. I don't believe they deal in inventory at all. It's all advertising revenue. This is a very profitable company. Now think about AT&T, telephone. They have 300,000 employees. This company has 7,000 employees, and the market capitalization is bigger than Exxon. So keep an eye on Facebook. The stock is looking good. Now, just to kind of throw this in, recently Facebook has announced that they are going to start a service called Merchant, which I've looked at, and it really is a direct competition to eBay and Craigslist. So again, you're in a business where there's no inventory, you don't have to have warehouses, you don't have to have all the labor, and they've signed a deal, or they have a joint venture with PayPal, where PayPal is going to provide all the payment services for Merchant. So you can see here with PayPal, it has been moving sideways for an extended period of time. Real bad dip here back in the summer. Has announced earnings. The stock broke out on the highest volume in the history of the company. So basically, breakout in PayPal. Now, just like everything else, it's pulled back to the top of the box. But we'll see. Now, in conclusion, what I wanted to get across this morning is that a bull market usually starts after an extended move sideways. So in other words, the saying on Wall Street is that the longer the base, the greater the race. So let's see what happens. If you have any questions, please give me a call.